Hello, everybody. Welcome to Monday. The S&P 500 was down just 0.25% today. Actually, a pretty decent outcome considering we were down quite a bit in the morning. Then a rumor came out on the trading floor that Trump might be, delaying the tariffs. In about 5 minutes, the market was up 2%. So 5% swing in 5 minutes. That's almost unheard of. You have to go back to the flash crash of 2010 to see that much motion that quickly. And so as I mentioned on Friday's show and during the summary, if you didn't get to see that, we've significantly reduced the equity exposure for our clients. Our average, our whole portfolio was 63% in the stock market, is now 23% in the stock market. And what we have left in the stock market is things that have high appreciation or things that have personal meaning to somebody, or, we've been given instructions to hold on to those. We'll see how that works out. We'll continue to, look at those and try to figure out what to do with that part of it. But, we're not really advocating to take big gains at this point, just because, again, this is a manufactured crisis that could be turned around, in a heartbeat. But if it keeps going down this high tariff path, you're going to end up with a structural downturn that they're not going to be able to turn around. And the risk is really high of something breaking, kind of like what happened in 2008 with the, Lehman Brothers failure. And we went from down 27 to down 57, pretty quickly. So that's where we're at. So I want to talk about what we need to look for here, and this is starting to remind me more and more of the pandemic. And so during the pandemic, the market's falling and falling and falling. Everybody's calling for the next depression, and Congress starts to come out and do stimulus bills. And the market turned around, and nobody really believed it at the time. Well, it's just a fake bounce. Turned out to be the bounce. Turned out to be the thing that actually really got the markets going. Matter of fact, it got going maybe too much and put out too much money, eventually caused some inflation. But it was something to watch for. So, does Congress do some type of a stimulus bill, maybe with some of the money that comes from these tariffs? Do the tariffs stop? I mean, today's a great example. Just a rumor that they were going to delay them made it move dramatically up. So does you really focus on what's coming out of Congress? So right now there are 9 GOP senators that are supposedly banding together, working on a bill to basically take back the tariff authority from the White House. I don't know if that'll work or not, but that's something to watch for. And there's a court case right now challenging the executive office's ability to do these tariffs. You can only do as a president tariffs if it's an emergency. And so they're claiming it's a trade emergency. Courts are going to decide whether that's a real emergency or not. So that's something to watch for. Probably would end up at the Supreme Court. Could take a while, for that to come around. But nonetheless, these are the things that are happening. Does the White House change their tune? Do they do a delay? Do they, to start to really negotiate and start to reduce these tariffs? Theoretically, on a basis of pure negotiation, you could end up with a much better situation than we have now, and the market could really like that also. So I will say, though, if the tariffs stay at this level, I don't see a path where things could go well. We're already seeing inflationary forces come into play because people are running out. The stories about the Apple stores being really crowded because people are trying to buy stuff before the tariffs hit. An iPhone supposedly would go from roughly 1,500 to maybe 2,500 under this tariff scenario. If it doesn't do that, then Apple's earnings take a beating because they're eating it. So, they're going to sell less phones at the higher price or make less money, at the lower price. So these aren't good things for stock market. You got a lot of big companies here that are going to suffer through this. So that's why, we've taken this defensive position. We were hoping that, on Friday, we would start to see, negotiations happening in a positive way. China comes right back with a 34% tariff. And now Trump, after hours today, is talking about another 50% tariff on China on top of, what we already have. Which would be 104% if I'm doing my math correctly, altogether. So, we get too many things from these countries to not have issues. However, again, all that could change. China and Trump could come to an agreement tomorrow, next week, a month from now, whatever that might be, and the market would love that. So you have to be a little bit careful here with what's going on. Try to read the tea leaves, so to speak. Because there seems to be some willingness to have some of these higher tariffs for some period of time. That's a little scary to me. But watch Normally we watch PE ratios and chart patterns and all these moving averages and relative strength and how much is the market stretched. Those things aren't as important here, just like they weren't as important during the pandemic. It's more what is happening. So during the pandemic, the vaccine came out November 9th, 2020. Market took off, had a huge day that day and continued to run, because that was good news for the market in terms of getting the US and the world's economy back on track. What type of news and what type of breakthroughs and what type of things are going to be happening is what we should be watching for here more than all of our normal indicators. And like I say, today was a great example. Just the rumor made it move 5%. So that's what we should be doing here. So anyway, that's what's happening right now. We'll continue to update you on what we're doing and what we're seeing as far as that goes. And let's see where this all plays out. Look forward to talking to you tomorrow. Thank you.